Good morning and welcome to the end of week review, week 18, quarter 2, 2025, which is from April to May 12th. Today is May 31. The reason why we do this week because we're missing this week in our archive. We haven't do this recording due to time constraint, but now we have a little time, so we try to make it up for the week 18th. A very interesting week. We have five full trading day for week 18th, and we have a very good setup. So let's dive in. For week 18, let's see, we have anything related to, we have a non-farm payroll. Let's check it out. So basically we are here in the last 3 days of April and then the first 2 days of May. So it's the overlap right there. And it's also a non-farm payroll week because it's the first Friday of the month. So very interesting to see how it's play out for the week of 18th. We do have all the recordings so we can review and data and see what we learn. So here's a non-farm payroll calendar, so give it the idea. So for May, it's released on May the 2nd. The next release gonna be in June right there. Let's see if they have any archive. Yeah, right here. The release May 2nd, and then the next release gonna be June 6th. So perfect. It gives us some time reference right there. All right, let's dive into the chart. So in terms of time, just keep in mind we are in here. We do a review on week 18. Even though we are in week 22nd, which I finished the month of May. But like we said before, we couldn't do that at the time, so now we kept filling the backlog recording. So we do week 18th right there. All right, let's go to the chart to see what we learned. So here's the screenshot we take in April 28, which is the Monday of the week 18 right there. So on our left is the weekly, and our right is a monthly. So it's monthly right there, and it's the weekly. From the weekly, we're not sure it's gonna be reversed from here. That's our take right there. Because we want the reverse, we want something, maybe you can see that right here, break, test from below and reverse, but the reverse did not happen right away. Take a pause right here. This guy is the pause. Yeah, that's the week 17. I wonder if we do a review week 17. Yeah, we take our archive on YouTube. We didn't do the week 17 either, so we may need to do that. So we have a lot of work to catch up. So right here we go to this one. This is not this one. This is May 28. So let me go back to, yes, April. No, April. Let's open it again. Yeah, here's April 28th. So this is the beginning of Monday, and then we're gonna see how it progress. Let's see the daily, like that's how the daily. So we see the huge gap right there on the week before. So this is the Monday right there. And we did mark our level. We see break touch on below. So the Monday, we suspect that it's gonna go down to this level again. That's our anticipate right there. And here's the 15 minutes. So it will be nice. You see that it all line up. You see the whole the whole Asia section and then London section. They are in the boxing. The Friday PM right here. So if it could be nice, if we're gonna do a Judah swing, take out the liquidity, the high of of the Friday PM or of the Friday high also. So in this case, the Friday PM is also the Friday high of on Friday right there. So basically, the last Friday, the PM is make the high of the day for the last Friday. So if we take that, that will be fit into the criteria of Judah swing. You take sweep out liquidity and boom, it reverse. So if you look at the chart, that's what we're gonna see. And then let's see what happened at the end of the day then. So here's at the end of the day. You see that it happened exactly 9:30. You see that? That's the open at 9:30. See this open at 18, boom, and then it take out it's typical Judah swing, boom, and then it reverse. So we have a lot of Judah swing lately. So that's the term by ICT's Judah swing at 9:30. Basically, it's a liquidity sweep, and it go right after it sweep, it reverse. So here's the Judah swing model that ICT put out. It's the very first model. We call it model 1 right there, which is Judah swing. And you look at the Friday PM and the 9:30 take out the liquidity, the low or the stop loss, and then it reverse. In this case, it's the long setup, but if we flip, it could be the short setup, which is fall into this Monday, April 28th. You see that it take out the PM, which is also the high of the Friday, which is the prior Friday before that. And you see that it trade that liquidity and boom, it reverse. So that's the typicals of the Judah swing that we often refer to. And we give credit to ICT, he termed the Judah swing right there. So he gave the name Judah swing, basically the idea of liquidity sweep. And if you look online, a lot of guys talking about liquidity sweep right there. And the idea that we only engage or take an entry when we see the liquidity sweep, otherwise do not trade. At first we don't understand that, but as we progress further in our journey, we learn that patient waiting for the setup is the key. It's not just trade, take click. It's the waiting. Waiting is give us the wisdom and give us the patience. Because the minutes that we have a FOMO, we rush, we will make error, we make mistake. Yeah, that's what we learned. That trading is about waiting. It's not about actually you check a trade. Waiting for the market, to open up itself and present us opportunities, so we don't have to force ourselves into the trade. Let the trade come to us. That is another way to say it, or another way to put it. So right here on Monday, April 28th, we see that this is a typical euro swing. But we can see that it also, we do have a pattern right here. It tests from below. You see the take the level 55.62 right there. Test from break and reverse right there. But the trick is that the level is too down here. So if you check entry right here, you have to take profits when this candle close. Otherwise, come back to your entry right there. But it's very nice. It gives an idea that. But if you don't go into the first leg down, then wait for retracement, you're gonna go into a, yeah, you can see the setup right there on the Monday. Very beautiful. Let do try it out real quick. So that is before we go there, let's look at the end of the day. Where's end of the day? Very interesting. We missed end of the day. Okay, right here. Okay, so basically before, you see that, yeah, this is before, and after is also a very dozy candle, undecided right there. But one thing, it happened that it did touch that level. This level right here, you see that? So yeah, this is the before, right? We anticipate that it's gonna test level, because you know why? Because it break test from above, so it will reverse. It will test level, it will reverse. If not, then it still touch level. In this case, so it touched that level. Basically, in the low time frame, you can see that it touched level right here. The level that we mark high time frame, it tests the level, and then boom. It did not follow through. It will follow through, then it fall into a four breakout type 1 break, touch from above and reverse, but it did not happen. But if we check the trade, then our target will be at that level. So if we miss this euro swing, then we can go in with the second leg down, and you can see that beautiful setup right here. Let's go into the chart. So if we roll back the tips, we go to April 28th right there. It's 9:30. You see that? It take our liquidity for the last 2 days, the prior 2 days for that matter. Then it reversed. So it's a euro swing at 9:30 right there. So the day before that is the Friday 25th, and then the Thursday 24. So it rate that liquidity, and then it reversed right away. And right here, if we miss the first move, we still have opportunities to go here into the second move. And here's the drill down right here. So either we mark this candle right there, Okay, let's go with this level because the level and the level almost the same. So what do we see right here? So let's see what the height of this is. 55, 56. So 55, 56. Oh, something. No, 55, 56. So why this one? Is that right? 55, 56. Very interesting. Okay, 56. Yeah, we mixed out the number right there. So 55, 56. Let's differentiate this one, give us a level like that. So basically, what do you see? You see test from below, break and reverse. That is type 2. For breakout type 2, and it's a continuation. It's so accurate. Just go back to our framework. Here's our framework. We trade on 4 breakout 2 type. You have a type 1 and then you have a type 2. Type 1 is on the right, on the left, and type 2 is on the right. And on the top, it's going to be a short setup. And in the bottom, it's opposite, is a long setup. So you have a type 2 right here, in this case, short setup, test from below, break and reverse. And remember, the type 2 is largely, we don't know exactly number, but let's give a number. 80% it fall into the continuation of the trend. And the type 2 is for reversal. So in this case, you see that the trend set up by this by this guy at 9:45. That's the first leg down right there, and you see it did create a fair value gap. But keep in mind, fair value gap is the technical term coined by ITC right there. Basically, the gap right there. And then you see that the continuation right here, so this is a type 2 right there. Break, test from low, break and reverse, that's type 2. And that's what we are seeing. Let's check screenshot this and we do a description so we can learn. And also mark right here, you see that the level, the open range only gives us a good reference point. In this case, is the opening gap right there. It have an opening gap range. Let's fix the color, make it a little bit transparent. We don't want too much color. Yeah, give it some idea right there. So this is the PM, New York PM, and then you have Asian right here, and then you have London. Yeah, we don't mark the AM, that will be too much, so that's why we leave the PM out. New York PM. Alright, let's take the screenshot to a analysis on this, so make our learn is more fascinating right here. So basically we have the first move. We have the Judah swing. Remember, we have Judah swing right here. Yeah, let's give it a little bit time frame preference. So right here is at 9:30. It's 09. $9.30 right there. And we have a Judah swing. You keep in mind, this is a Judah swing right here. If we look at daily, we can see that it's the Judah swing at 9:30. you have Utah swing at 9:30, and then you have setup right here. This is a type 2. And what the time frame of this one? Okay, 10:45. Very interesting, huh? Yeah, we want to see in case of Utah swing, what time it's gonna do from the first leg to the second leg. What a different, what the time window between us. So 10:45, 10:45. So right here you have 9:45, so 1 hour later. So 9:45 you make the first down move, and it take an hour to build the sell side liquidity. Then boom, it make a huge second leg down right there. Yep, let's check this screenshot again. So right here you can have Utah swing at 9:30, and right here you have a setup. You have a test from below, and then you have break it, and then it reverse. We have a little, oh yeah, restate challenge right here. We have to make our way through this. All right, now let's edit this one. So right here you have a Utah swing. Yeah. Keep in mind, Utah swing always happen when it have to take out liquidity swift or stop loss. Hunt right there. Utah swing and 9:30 right there. And right here we have a first step of a full breakout type 2. So it's a test from below. That's the first step. And then you have a second, which is the level, test from level right here, right? 55, 56. And then right here you have a the break and the reverse. Okay, hold on. I think the way we mark this, come back here. Yeah, because we put this right there, so we don't have much. Okay, let's do this. Okay, I'm so glad that we see this, so we can fix it real quick. Yeah, we just make sure that much better. So this candle is the break. We just want to make sure that it's accurately as human as possible. So we do our best at our way. All right, so we start over right here. And then right here we have the first step is that from below, and the next candle is gonna break it. It break the level, and then the following is at 9:45, no 10:45. We see that it's reversed. Yeah, it's reversed right there. So basically, we have a 4 breakout type 2, which is include 3 steps. That's in this case is a short setup. So test from below, and then you break it, then reverse. Just keep in mind. And in this case, we notice that it happened in a continuation, which is fit into our framework, our pattern right there. So the type 2 is very common in a continuation, and the type 1 is happen in reversal. Here's the type 2 right there. So the type 2 happen in a continuation. Basically, it reversed in the sense that it ending the retracement and it's make the second leg down, which is continuation. But for the type 1, it's a reversal. It end of the trend. This guy is the type 2 is end of the retracement and the continuation. So right, this is retracement right here. First leg down, retracement, and then next leg down. So type 2 is continuation. We can put a little bit no here. Basically, it's end a reversal in the sense that it end the retracement. So you have expansion, retracement, and then boom, expansion. End of retracement. Yeah, so 4 breakout type 2 signal the end of the retracement, which is the next expansion move, and it continuation. Yeah, alright, let's save this one. Alright, we just save it. So we put right there, it's Euro swing at 9:30, and also it combined with 4 breakout type 2. Is that right? Yeah, 4 breakout type 2. I think we mix both type right there. We mix an E. Alright, we just fix this. Let's close this. Yep, so type 2, neck leg down, which is continuation right there. That's a huge breakthrough for us. Before that, we're a little bit confused between when we need to trade retracement, or we need to trade with the continuation or reversal. But it's like we say, it's a lifelong journey. You're not gonna get it overnight. Patience, grit, or resilience is so matter. It's much critical in this journey. Right, grit. That's what is similar resilient. That's the key for successful in this arena, which is swing. We are doing right now is to swing trading, day trading. Yes, this is a lifelong journey, and it's a creation. We create our own journey, our own wealth, or our own freedom, autonomy. Alright, so that's the Monday. It's so clear. And that's the Monday morning. And in the afternoon, you do have a reversal right here. It's so beautiful. You see that? Wow. That is the type 2, type 1. So in one day, we have two setups. We have type 2 right here, and then we have a type 1. Alright, let's do a markup for this. Let's do a analysis right here. So this one is so clear. You couldn't ask better than this one. The low of this 54, 99, 75, 75. So basically, what do we see? We see the break, touch from below and reverse. That is the type 2 right here. Man, so beautiful. And type 2 type 1 right here. Break, touch from below, reverse. And this one it happened on reversal. Exactly after 2 leg, right? First leg, retracement, second leg. And you could say maybe more than 2 leg. It's more like right here. Third leg, 4 leg. After 4 leg, if you count, 2 small leg right here, then the reversal happened. And the reversal is type 1 right there. Break, touch from below, reverse. Man, you could not better setup than this. And the time frame for it, wow, exactly 1:30 p.m. Man. We didn't trade. Did we take any trade on Monday? Let's take a look. We don't know. We'll have to take a look to see. So this one is 13:30, which is 1:30. So right here, right? Exactly. It did not trade the low of prior day, but it trade the prior day PM. So at least it give us some liquidity having rate. It'd be great if it rate the prior day also, but it not. But keep in mind the level we put on. Oh yeah, if you look, right, if we look in the daily, it's just right here. And yeah, you can see the level right there. That's the level. Yeah, that story here you can see very obvious. It's very close to the high time frame level. It's the monthly right there. But what's the high of this one? The high of this one, 54.9975. All right, 54.99. Wow, very close. 99.75. It's almost 55, right? One more tick. Yes, so you see that? So this level, we have a reference right there. Break touch from above, and you see it reverse. We did see that on our screenshot. So it did, as long as it break that level and it give a reversal, then we take it. We don't need to take the low of the prior day in this case. So the high time frame, daily time frame give a very good indicator. You see that it hit that level, And exactly, you see that it matched with the low time frame 15 minutes right there. Wow. You cannot ask for, you remember withdraw right there, it's still there. It completely matched that. And what's the low of this one? Exactly 99. Wow. It's precisely how the algo run right there. Alright, let's take this screenshot and do a little bit deep dive on this and put into our journal that we saw this setup. So basically we have the test, the break, the test, I mean, so perfect, so perfect. After this down move, this is so perfect. It hit every requirement or every checklist we have to in order to take the trade. You could not add a better setup than this. Let's do the write up right here. It's basically the very first step is break the level. That is the signature of 4 breakout type 1. And then you have what? And then you have, and look all this candle, they make a low right there. That is so beautiful. That is the sell liquidity rate there. Test from below, and then number 3 we have a reverse. So right here basically we have a 4 breakout type 1, and this one is a reversal. Yep, the other one is continuation. Yep, you have a break, you have a test from below. Sometimes the test from below can happen more than one time, but in this case it's just one time, which is good. It should be good enough. And then reverse. So it's a reversal. Right here is the reversal type 1, which is exactly what we describe right here. The type 1 is not only but majority is fall into reversal, and type 2 is majority is fall into the continuation, and it signal the end of retracement. So right here. Yeah, we put the time reference right here. Totally perfect. Could not better than this. Alright, let's save this up. Alright, we just save it up right there. So it's just a Monday, but it give a very beautiful setup. Euro swing, and then the neck leg down continuation, present itself at a 4 breakout continuation type 2 right here. 4 breakout type 2 continuation. Yeah. And then you have type 1 right here. 4 breakout type 1 is a reversal. What I'll write up for that 20, no, it's not 20, yeah, April 28th. What I'll write up? We did do the write up. Oh yeah, right here. Yeah, right here is the type 2 continuation. Oh, okay, so we need to put right here continuation right there. And of retracement at 10:45. Yeah, let's fix up this one a little bit. fix up right here. Basically, we want to say that it's type 2 continuation. We want to differentiate between type 1 and type 2. We want to see when it happened. Continuation. Yes. Yes, that's type 2 continuation. Yep. Oh, okay. We put the time reference right here at 10:45. Is that right? Yeah, 10:45. 1 hour after the first expansion to the outside. So it takes an hour to build up liquidity. Yeah, so make it more clear now. Yeah, we keep doing this exercise as much as we can. It's become, our muscle memory. Then when we see the setup, we check it. If we don't, then we wait. Yeah, let's see. We did have a screenshot. See what did we check? Any trade? Let's find out. Okay, so by the way, we charge and we study on we charting and we study on the Thinkorswim platform, but we take our trade is on Top Step because where we sign up for our channel right there, so it's the Top Step. So it's at 8:32. We can see. Yep, that's how. And we do see that the level right there, level withdrawal. There maybe is a little bit discrepancy in terms of the price level between Top Step and Thinkorswim. So just keep you on a heads up right there. If you see the level price does not match. Right, the level withdrawal. See that withdrawal is similar right there. So it's break test from above, and we anticipate it's gonna revisit that level. It revisit in order to break it, or it's gonna revisit just for liquidity sweep. So 9:30 is out there, so it makes a Euro swing right there. It rate the liquidity of right there and boom. It reverse. All right, so we're going. Can you believe that? That's we take advantage of Euro swing right there. So we're going at 35. Boom. Wow. We're so excited. But it's okay because the markets doesn't. Basically, we go a little bit too early. It just go back, wrap our liquidity, and then boom. Oh, I see now. So right here it did rate the liquidity. You see that we thought it's gonna be a sell off from here, but we learned our lesson. The Euro swing, you have to let it swing. It not swing yet. That's the reason why we get run over right here. We have to let it swing. Yeah, when we go in, we say, wow, it did rate. Right? We have that in mind on that day. We thought that as soon as it rate liquidity, then it's good for us to go in. But keep in mind that Euro swing need a real up close candle. In this case, it really sweep. It really swing. It haven't swing yet, so don't go in. That's the pure lesson that we learn right there. You see that? The minute we go in short, we go too early, and it swing. Let it swing. That's the whole idea of Euro swing. Let it swing. It's not swing yet, so be patient. As soon as it finish swing, then we go in. Yet that's exactly we're going. We short again, and this time we succeed. I believe. Yes, this time we succeed right there. Boom. Yeah. I think did we take profits? No, we did take profit. We let it run. Boom. We take the profit right there. Oh yeah. So our first entry is a little bit too early. So lesson is very clear. You don't swing, let it swing. Let it make it swing first. When it's not swing, then don't go in. Go in, we get run over, get top. We get our head top up right away. You don't swing, then let it swing. And as soon as it swing, we engage. That's the perfect entry for the second time. You see that? As soon as swing, and we saw it rate the sell side of the 930, then we know that the market is so its hand to it right there. It invite right there. Say, hey, let's come. Let's go in. You know, the first time you go in is a little bit too early, but this time it's present a beautiful entry. Boom, we take full advantage of that. Yeah, and it's the hill run. If we let it run a little bit more, yeah, we can have a hill liquid right here. But you know what? That's good enough. And we look at the daily, see how it's play out. Oh yeah, and we come in here, we short them. Let's see how it play out. Oh yeah, we make mistake right here. We make mistake right here. Let unit level don't go in yet. It touch from below, okay? Let it break the level and it reverse. That is type 2 right there. That's another lesson we learn. So beautiful. We try to short right here, but it's too early. You see that? We thought that it's gonna be first leg down and then retracement and then boom. It make the second leg down. So similar like the first time we tried a little bit too early, this one also early. That's how we learn. We make mistake, we learn. And then it come back and we take it out. So we get back the profit right there. Okay, right here, what did we do? We try to show them again. Wow. Boom. And we pay the price right there. So we give back profits. But you see the pattern so clear. As soon as you see the candle after expansion, you mark the high right here, you see the touch from below. Let it finish the 4 breakout setup, which is a 4 breakout type 2. Touch from below, break and reverse. We have been talking about that all day long right there. So that's exactly, and now you can go in and short them. Alright, it's touch from below, break and reverse. That exactly. So we short them beautifully. Yes, we short them, and we maximize our side right there. Go all the way to 15, and look at that. Exactly, go to our target. Did we? Yeah, I think we get out early, but anyway, that's a huge profit. Oh man, you couldn't ask for better than that. You see that it go and visit that level. We should let it hit out of the 54.95 eventually, right? 54.95. Yeah, it hit eventually. You see that 95. So if we leave, at the original targets. We get our right there. We get 13. We get 13. Exactly $13,000 right there. But anyway, 95. Yeah, check out early. Yes, so that's the beautiful trade for the Monday. Let's see what the rest of the week 18 teach us for the rest of the week 18 what you can learn from that. Well, look like on Tuesday, April 29th, we have a lot of lessons to learn. All right, let's look at the beginning. All right, we see that on Monday, it did not break that level. So it may not go to reset again, but it high level, it tests from below, it may break the level. The 5562 right there, that's our level that we try to watch, the key level. And we go to beginning of the day. Here's our see right there. So maybe another Euro swing happened. If it not, then it go to the upside. You see that it's still no. Actually, it did rate the prior day PM. It not for the Euro swing. You want the London and Asia is right between the range of the prior day PM, and then boom, it swing. You take out the liquidity on one side and then revert to the other side. But in this case, the Asia already take out the prior day PM in this case, and the London also similar. So it may not fit into a Euro swing first, Euro swing pattern on Tuesday first right there. Alright, so let's see what is the end of the day for that day. So here's what we see at the end of the day. Yeah, it did rate all this high, but the rate is in the PM. Oh yeah, you see how remarkable it is. It did have some setup for you. You see that level break, test from below, and then reverse. But it's very hard to trade in the AM. You can see that. After the easy move right here, a very low resistance liquidity run on Monday. The Tuesday is very risky. You see that? It's like it go up the stair, but here it's like up and down of a elevator. So the stair is a little bit tricky to trade. You see that? Because a lot of very small move. That's what we're trying to say right there. Very straight small move. It back and forth. Very high resistance liquidity run. And let's see how we handle that. Let's see. We do have. Okay. We say candle retracement. Candle after expansion. It's a retracement. Oh yeah, this candle. So pay attention to this candle. That's what we say right there. The candle after retracement in this case. Yeah, there's a candle retracement right there. That's the pattern. You see that? So it's the first leg down, and look at this candle. It break the level and reverse right away. Sometimes it tests and reverse, but most of the time, but sometimes it just break and reverse. So that's a comparison we try to do right here. Alright, let's do some write-up for this. Very interesting lesson right there. Alright, we have 6 more minutes left, so we try to wrap up with this case study, which is we term the name is the candle after the expansion move, and that candle can give us whether retracement and the next expansion gonna be in place or about to take place. So we take a look at hold on. We take a look at this phenomenon right here. Is this one or hold on? Feel a little bit confused right here. Okay, so right here. So our idea that we see this candle, we see that the first leg down, retracement, and then expansion, next leg down, and we see that happen on March 31st, right? That's the candle after expansion. So we mark the high of that candle, and to the left we also see this level also. We're very interested to see how like here's another scenario that we see on the low time frame is 15 minutes, but it's the same idea. It's the candle after expansion right here, and we mark the high, and here we have a pattern that is go into a full breakout type 2. It's beautiful in setup. That's from below break and reverse right away. So that's type 2 right there. But for this scenario, I think we where is our something we have to open again. I think we do something to this. Okay, but for this case, this retracement a little bit tricky to recognize because it does not present to us very clear setup like for breakout type 2, but it gives us some idea to see how we can detect this. So we do a little bit deep dive on that day, right? April 31st, not April, March 31st, right? And we mark the high of that candle is a level of 56.7275, and we see this candle right here. It is close at 72.25, so just 2 tick below that level. It would be perfect if it's a close at that level. It helps us to see that if it's close above that level, then there's no reason for it to come back to that level. The only reason to come back to that level, which is 56.7275 right there. Then what? Then what happened? Then it's gonna be a next leg down. Okay, so we come with this idea right there. So basically, if 1 or 2 ticks, it doesn't matter right here. So basically, if the candle after expansion, if you have a scenario where it tests from below, very clear in this case, then don't engage. That is break that level. But if it break that level already, then the next time when it come back, then there's no reason for it to come back. The only reason for it to come back. So that give us a clue. God can give us the clue. So that's an idea. Let's do the modifier right here real quick. So the whole idea is that if that candle, you see the test from below, then wait for its break and then you entry on the reverse. What if we don't see the test from below? Then we wait for it break and then enter on the reverse. Yeah, otherwise we miss the trade because we wait for. We want to wait for the break. Oh wait, we want to wait for test from below. Or in this case, is actually this guy still test from below, and this one's going to be what? To be reversed, but it got flipped, right? It got flipped. Then that's a good signal, right? It got flipped very huge because it rate this sell cycle right there. If you look in the low time frame, you can see that's the huge, and it break in reverse. It flip in the very last 15 minutes. So it's at 15:45 right there. Maybe some breaking news on that day for a reason. So that's just the huge lesson we learned for the week 18. Only for Monday and Tuesday, we didn't have time to cover or the rest, which is Wednesday, Thursday, and Friday. But anyway, we have a good session today. We thank you for your time and interest. We're always grateful for the opportunities. And we do what we love, then success coming our way. Day by day, little by little, we're getting better. Thank you and have a great evening. See you next episode. Bye for now.